Hey, what's going on, traders? Thanks for checking out this video. My name is Travis from Master the Market, and I get questions all of the time asking me what time frame I use for my trading. So I wanted to make this video to talk a little bit about what I believe to be the best time frame for trading stocks. Now, first and foremost, what a time frame even is going to be the amount of time that every single candlestick on your chart is going to represent. So this can be just a 1 minute period of time, meaning that every single minute a new candlestick opens and the previous candlestick closes. This can be a 5 minute period of time, meaning that every candlestick represents 5 minutes of price action. It can be 15 minutes, it can be an entire hour, an entire day, or even an entire week. And really that's all we're referring to when we talk about the time frame of a chart. And believe it or not, the time frame that you use is going to kind of play a big role in how you look at the chart. So because of that, you really should be using different time frames for different styles of trading. Now, in order to get into what I mean by this, it is important to kind of just know the very basics of candlesticks themselves. So I wanted to just briefly cover what these candlesticks represent. And every single candlestick is going to have an open, it's going to have a high price, it's going to have a low price, and then it's going to have a close. And again, this can be over a set period of time, like just 1 minute, or this can be over an entire day or an entire week. Obviously, also, if this is a green candlestick, that just means that the close price is going to be higher than the open price. And of course, if it's red, that just means that it closed at a lower price than it opened for that specific period of time. Now, just for some quick definitions also, the colored rectangular section of the candlestick is going to be known as the real body, and the line sticking out from the top of the candlestick, which shows us the highest price that the stock went within that period of time, is known as the upper wick, and the line sticking out from the bottom of the candlestick, showing us the lowest price that the stock went within that period of time, is known as the lower wick. Okay, so with all of that being said, as I've kind of already mentioned, the type of trading that you're doing should really go hand in hand with the time frame that you use. And what I mean by that is shorter term trading is generally going to mean that you're looking at shorter term time frames, whereas longer term trading like swing trading, where you're holding positions for a couple of weeks, sometimes up to a couple of months, that's going to require you to mostly focus on longer term time frames, like maybe the hourly chart, the 4-hour chart, or even the daily and weekly charts. And this is really the general rule of thumb when it comes to focusing on a specific time frame, because at the end of the day, if you're looking for a longer term swing trade that you're planning on holding for maybe a few months at a time, it's really not going to be in your best interest to focus on a really short term time frame, such as the 1 minute chart, because that is just going to give you a very short term look at what the price action may lead to, whereas something like the 4-hour chart or the daily chart is going to allow you to kind of look at the bigger picture, which is really what you need to see for a longer term trade like a swing trade. So just to kind of give you a further example of what I mean by all of this, we have two diagrams here. We have the 1 minute diagram here on the left side, and then we have the 5 minute diagram here on the right side. And believe it or not, these two sides are showing us the exact same price action over the exact same period of time. Again, because this is the 1 minute chart, every single one of these candlesticks is going to represent 1 minute of price action. And because there are 5 of them, this is showing us a 5 minute period of time. And over here, because this is the 5 minute chart, this one single candlestick is showing us 5 minutes, just like these 5 candlesticks on the left. So on the left, in this 1 minute time frame, we can see that this is where the price opens for this period of time, which when you compare it to the right side, this is also the exact same price that the 5 minute candlestick is going to open. We can see it hits a low price down here, same low price over here. It hits a high price up here, same high price up here. And then this 5 minute period of time closes right here where the last candlestick ends, which again is the same price that this candlestick on the 5 minute chart is going to close at. So at the end of the day, depending on what type of trading that you're doing, it may be more beneficial for you to see all of these candlesticks within this 5 minute period of time, or it might end up just making things a little bit more complicated for you. And you may be better off just looking at the 5 minute chart, which is going to kind of give you a cleaner and clearer view of the price action itself. So if you're doing very short-term trading and you're scalping, you may be trying to take advantage of these very short-term quick moves that happen in the market. So it might be beneficial for you to see every single individual 1 minute candle But again, otherwise you might not need to see all of those, and you might be better off with the 5-minute chart or something even a little bit longer term like the 10-minute or 15-minute chart. So as for my personal preferences when it comes to day trading stocks, I personally focus on the 1-minute chart, the 5-minute chart, and the daily chart. Now I know that's not a simple answer. You probably came here looking for one specific time frame that somebody focuses on, but the reality is that looking at just one time frame is going to just be one piece of the puzzle when it comes to day trading, and you want to give yourself the best chances of success, which in my opinion happens when you look at multiple time frames. My personal favorites happen to be the 1-minute, the 5-minute, and the daily. And you may be wondering why I would look at the daily chart when I'm doing day trading, since day trading is a short-term type of trading and the daily chart is a longer-term time frame. So I wanted to show you this example here. If we're looking just at the left side of the screen here, looking at the 1-minute chart, from that perspective, this looks to be a very strong uptrending stock. We can see that it's making both higher highs and higher lows. The volume is climbing, and this might look like it's a good buy just based on the 1-minute time frame. But if you look at the bigger picture and you take a look at the daily chart on the right side of the screen, we can see that even though this is very strong intraday, it does happen to be running into some resistance on the daily chart. Now that's not to say that this can't continue to go higher through this resistance line, but at the end of the day, it's never a good idea to buy directly below a level of resistance. So at this point in time, you'd be better off waiting for this to have some kind of pullback that you can dip buy into, or wait for it to have a confirmed breakout over this level of resistance before you actually buy into the stock. And by just looking at a short-term time frame like the 1-minute or the 5-minute chart, you're going to completely miss out on the fact that there is a nearby level of resistance, and a lot of times that can cause you to buy into the top of a move before it starts to come back down. Okay, so moral of the story is to mostly focus on shorter-term time frames for shorter-term trading types like scalping or day trading, and longer-term time frames for longer-term trades like swing trading or even long-term investments, but still take a quick look at the longer-term time frames like the daily chart or even the weekly chart just to help yourself look at the bigger picture so you can see if there are any nearby levels of resistance that you should be worried about for your day trade. Okay, so hopefully that helps you a little bit with figuring out what time frame to use for your trading. If you enjoyed this video, please make sure to give it a like and subscribe to the channel. And if you want to learn more about day trading, swing trading, and investing, you can go ahead and join the Master the Market team at the link that is down below in the description. But anyway, thank you again for watching. I hope you enjoyed this video. And until next one, good luck with your trading.